Hi everyone, welcome to our live coverage here at the Business Exit Summit, and I'm delighted to be sitting with David Short, Managing Director and Investor at Short Partners. David has got one of those classic Australian business stories. So he started as a delivery driver in 1998, built Shorty's Liquor from a tiny store in the Rocks into an $85 million business with a strategic joint venture with Woolworths, and now he's helping other founders navigate their own exits. Dave, welcome to our show.
Thank you very much.
Now, Dave, here's what I find fascinating about your story. So you could have sold Shorties and probably bought a boat and sailed off into the sunset, but instead you decided to help other founders in this journey. So, what drove you to start Short Partners?
What drove me to drive Short Partners is, I've got a 14-year-old, an 11-year-old, and a 6-year-old, and actually got plenty of fire left in my belly. So I'm keen to actually look for my next project, and I'm really happy with the first couple of chapters that I've written, and I'm looking for a new chapter to write, and that's going to involve finding a great business and seeing what I can do with it.
Yeah, absolutely. That's amazing, Dave. Now you talk about transitioning with dignity, and I think that phrase really resonates with a lot of people. So when does it actually look like? Sorry, what does that actually look like in practice? Because I imagine that a lot of founders are going through that.
Yeah, look, I hadn't even thought about selling when we were approached originally by Woolworths. And the thought about selling that business and wrapping up would have been a lot for me, because a lot of my identity was part of the Shorty's business, and I loved what I did, and I really loved it to the last day I was doing it. So I'm actually looking for a business that someone might have run their journey with the business. They might have been doing it for 20 or 30 years. They've come to a different stage of their life. They still love what they do. I'm looking at changing industries, looking for a new industry that, with this whole technology revolution that's happening, that I can come in and disrupt. And I want to take that knowledge and that experience that the founders got and continue their legacy by growing the business, by, building their team, taking their team to a new level, and, really transforming what they're doing.
Absolutely. Now, recently you spoke on a panel about connecting with private equity and serial acquirers, but you come at this from a different angle. So you are an operator turned investor. So how does that change the way that you evaluate a business compared to a traditional PE firm?
Yeah, I'm certainly not looking for a business that I can buy and turn in 3 or 4 years. And I think the advantage I've got there is that I'm not looking for a business that we're going to take shortcuts to increase profitability and and get fast growth for the wrong reasons. We're looking for a business that we can sustainably grow, and that will deliver great profits and and turn into a great sustainable business.
Yeah, absolutely. That's wonderful to know. Now, let's talk about your target market. So, you're focused on businesses that are generating around 1 million to 1.5 million of EBITDA. But now that's quite specific. Can I ask you, why that particular range?
We've actually increased that. So, it's between $1 and $3 million EBITDA. So, that sort of falls in the remit on an earnings basis that I can sort of buy outright myself. I'm also looking for that business that I can then scale and double or triple that EBITDA.
Right.
So we're looking for for a wonderful business that's playing in that space, that that needs to go to the next level, and that there's opportunities to do that. But maybe the founder, they might have built their website, they might have done their ERP, but they don't know how to take it to the next level with with some passion and with some technology enhancements. And that's why we're sort of focusing on that sweet spot. There's a whole tsunami of baby boomers that are coming to their retirement age, and I think we'll find one or two businesses a year that we can potentially purchase and get really involved in.
Yeah, amazing. That's wonderful to know. Now, talking about fears, legacy preservation is huge in your messaging. So, can you tell me about a time when you had a chance to convince a founder that their baby was going to be in the good hands?
Well, we're going through that process now, so we're having those conversations, and there's a lot of trust that will be around that.
Yeah.
but at this stage, we haven't purchased that first business. We purchased a couple of businesses while we're going through Shorty's,
Right.
and we maintained those legacy, and we maintained all those customers. And I suppose from my perspective, we've got the experience of actually being through that process and doing it with Woolworths. So we've seen the good and the bad of it,
Yeah.
and that's from my experience.
What would you say the biggest challenges are that you've come across in your journey?
The biggest challenges is finding the buyers that are motivated for the right reasons, and finding finding that right business to scale. It's very difficult for someone that is wanting to sell their business to actually advertise it. There's no great platforms that sort of showcase their business. There's a lot of complications around advertising your business for sale. You don't necessarily want your whole team to find out that you're selling. Only 20% of businesses sell that actually go through the sales process. So it's a very difficult process to do. So we're going through that stage of just finding that right business. And for us, it's finding the right one or two businesses to buy.
Yeah, absolutely. Now, Dave, for the founders who are watching this interview and who might be, let's say, 2 to 3 years away from considering an exit, what should they be thinking about to prepare for the conversations with buyers like yourself?
I think the most important thing is, understanding why they want to sell, and then getting their business in a position to sell. So ensuring that they're not, super reliant, the business isn't reliant on the CEO or the owner of the business, that they've got, motivated and trained staff that are, that can help continue, grow and maintain that business if they were to leave. There's a whole heap of things that they've got to get right to do for due diligence, especially for a private equity firm, that they can start on. They can start getting their books right and ensuring that all the basic stuff is done. But having a strategy, having a plan and having a succession plan is really important.
Yeah, absolutely. That's great advice coming from you, Dave. So, David, I would love to know what sort of businesses are you looking into?
Yeah, we're looking for businesses that have got an EBITDA between $1 and $3 million, that have got a really good moat, that have got which means, it's got a competitive advantage. Potentially recurring revenue would be really important, and has got a good team and culture that are ready to sort of take the business to a next level. We're really looking for a founder that was potentially really passionate and still passionate about the business, that is exiting for the right reasons, and an industry that's got growth, and where there are the clear opportunities to scale the business.
Absolutely. Any particular sectors that excite you?
We're pretty industry agnostic. There's probably
Okay.
sectors that we're not really interested in. So, straight out tech, we're not interested in. Hospitality and, straight out retail, we're avoiding. But we're pretty agnostic around the rest of it and happy to have a look at everything.
Now, before we wrap up our interview today, it is great to have you on a panel session discussion at the Business Exit Summit. So how's your experience been? Do you have any key takeaways you could share with us?
Yeah, I think it's been great. I think the speakers have been really outstanding. And when I look through the process that I went, especially with Woolworths, it was really important to have some trusted advisors. We had a fantastic, accountant from Nexia that was a M&A accountant. We had Brent Goldman. We had a fantastic lawyer who was a specialist in M&A law, Paul Miller. So, I think there have been some really good advisors here that could offer a lot of experience. And I think those advisors pay themselves, many times over with great advice.
Yeah, absolutely.
So it's making sure you get great advice and be prepared.
Definitely. Very well said, Dave. Now, to our viewers, thank you so much for tuning in. This was Dave from Short Partners. I look forward to seeing you all in my next interview. Thanks again, Dave, for your time today.
Thank you very much.
Thank you.